Have you ever wondered why the world economy swings like a pendulum, sometimes steady, but often unpredictable? Welcome to our exploration of the vibrant, often tumultuous world economy. It's a vast and complex system, with its steady rises and sudden dips, leaving even the most seasoned economists scratching their heads. Let's take a stroll down memory lane. Remember the global financial crisis of 2008? The world watched in disbelief as the housing bubble burst, sending shockwaves across the globe. Or how about the Asian financial crisis of 1997, when currencies plummeted and stock markets crashed, leaving economies in ruins? But it isn't just financial bubbles that cause this volatility. Political unrest can send economies spiraling downwards. Look at the Arab Spring or the ongoing conflicts in the Middle East. These events have had profound impacts on oil prices, and by extension, the world economy. Natural disasters, too, have a significant effect. The 2011 earthquake and tsunami in Japan resulted in an estimated economic cost of $360 billion, making it the most costly natural disaster in history. And let's not forget pandemics. The ongoing COVID-19 pandemic has brought even the most powerful economies to their knees. Unemployment spiked, industries were shuttered, and stock markets took a nosedive. All these factors paint a picture of a world economy that is, in essence, a house of cards. It's a delicate balance, easily disrupted by the slightest gust of wind. One wrong move, one unanticipated event, and the whole thing comes tumbling down. But what if there was a way to weather these storms? A financial lifeboat, if you will. Enter Bitcoin. This digital currency has been making waves in the financial world, touted as a potential hedge against economic uncertainty. In such a landscape of economic uncertainty, could Bitcoin be the stabilizing force we need? Stay tuned as we delve deeper into this intriguing possibility in our next scene. Bitcoin, an intriguing player in the financial world, commands attention and curiosity. But what exactly is Bitcoin? Let's break it down. In the simplest terms, Bitcoin is a form of digital currency, also known as cryptocurrency. Think of it as internet money. But unlike the dollars in your bank account, Bitcoin isn't controlled by any government or central authority. It's decentralized, meaning it's not tied to the policies or economic conditions of any particular country. Now you might be wondering, how can it be possible for a currency to exist without a central authority? This is where blockchain technology comes into play. You see, every Bitcoin transaction is recorded on a digital ledger known as the blockchain. This ledger isn't stored in one central location. Instead, it's distributed across a network of computers around the world. This makes Bitcoin transactions transparent, secure, and impossible to alter or fake. But how do you make a Bitcoin transaction? Just like sending an email, you need an address to send Bitcoin to and from. These addresses are a string of numbers and letters, and each one is unique. When you make a transaction, it's recorded on the blockchain, and once it's confirmed by the network, it's there forever. So, how does Bitcoin differ from traditional currencies? Well, unlike physical money, Bitcoin is purely digital. There are no coins to jingle in your pocket. Its value isn't derived from gold or any other asset, but from the trust and agreement of its users. And perhaps most importantly, Bitcoin's supply is limited. There will only ever be 21 million Bitcoins. This scarcity is part of what gives it value. But beyond its function as a digital currency, Bitcoin has another role, a store of value. So what does it mean when we say Bitcoin is a store of value? Well, let's break it down. Imagine you're a squirrel and you've gathered a bunch of acorns for the winter. You don't eat them all at once, instead you store them away, confident that they'll still have value, that is, they'll still be edible months from now. This is the essence of a store of value, an asset that can be saved, retrieved, and exchanged in the future, and predictably still hold value. Now picture gold. For centuries, humans have valued gold for its rarity and its beauty. But more than that, gold has served as a store of value. You can't eat gold or use it to heat your home, but you can always trade it for something useful. It's durable, it's difficult to counterfeit, and there's a finite amount of it in the world. These attributes make gold an effective store of value. Here's where Bitcoin comes in. Like gold, Bitcoin has a limited supply. There will only ever be 21 million Bitcoins, no more, no less. This scarcity is coded into the very DNA of Bitcoin. It's what sets Bitcoin apart from traditional currencies, which governments can print more of whenever they choose. This limited supply contributes to Bitcoin's value, making it potentially a good store of value. But, unlike gold, Bitcoin exists in the digital realm. It's like a vein of gold in the internet's bedrock, mined not with pickaxes, but with computational power. It's this combination of scarcity and digital convenience that has led some to dub Bitcoin as digital gold. Critics argue that Bitcoin's volatility undermines its ability to serve as a store of value. While it's true that Bitcoin's price can swing wildly in short periods, many believe its long-term trend has been upwards, reflecting its growing acceptance and use. In essence, Bitcoin's value isn't just in its use as a currency, but in its potential to hold value over time. With its fixed supply and digital nature, Bitcoin may well be the squirrel's acorn or the miner's gold for the digital age. How does Bitcoin's store of value play out in the face of economic turbulence? Given the economic shakeups of the past few years, this question has become increasingly pertinent. The world economy has seen its fair share of ups and downs. It's these fluctuations that have driven investors to seek safe havens for their wealth, and Bitcoin has emerged as a compelling contender. Let's take a trip down memory lane. During the Greek debt crisis in 2015, when the country's economic future hung in the balance, Bitcoin saw a surge in interest. As faith in traditional economic structures wavered, Bitcoin's value remained resilient, demonstrating its potential as a stable store of value. Fast forward to the economic fallout of the global pandemic in 2020. In the face of unprecedented economic uncertainty, Bitcoin's value soared, reaching new all-time highs. This surge wasn't a fluke. It was a testament to Bitcoin's resilience and stability, even amid global economic turbulence. Now, what does this mean for you as an investor? It's simple. In a world where economic stability can sometimes feel as unpredictable as the weather, Bitcoin offers a potential hedge against the volatility of traditional markets. Bitcoin's unique decentralization means it's not tied to any one economy or government. It dances to its own tune, and that can be a good thing when traditional markets are in turmoil. This independence makes Bitcoin a potentially valuable addition to a diversified investment portfolio. However, it's important to remember that any form of investing comes with its risks. While Bitcoin has shown promise as a store of value, it's still subject to market forces and regulatory changes. As with any investment, it's crucial to do your homework and understand the risks before diving in. So as we navigate through these turbulent economic times, it's worth considering the role Bitcoin could play in your investment strategy. Its proven resilience and potential for diversification could offer a sense of stability in an ever-changing economic landscape. Bitcoin, with its unique characteristics, can offer a hedge against the volatility of traditional markets. We've journeyed through the volatile world economy and discovered Bitcoin's potential as a store of value. Let's take a moment to reflect on the key insights we've uncovered throughout our exploration. We embarked on this voyage by setting the stage with an overview of the world economy's volatility. We've seen how unpredictable events and market fluctuations can send shockwaves through traditional financial systems, causing instability and uncertainty. Next, we turned our gaze toward Bitcoin, the pioneering cryptocurrency that has taken the world by storm. Emerging in 2009 as a response to the financial crisis, Bitcoin has grown into a global phenomenon. We delved into Bitcoin's underlying technology, blockchain, and its decentralized nature that sets it apart from traditional monetary systems. We then shifted our focus to Bitcoin as a store of value. This concept, often linked with precious metals like gold, refers to an asset that maintains its value over time. Bitcoin, with its limited supply and decentralized nature, has shown potential to fit this role. Despite its price volatility, many see Bitcoin as digital gold, a safeguard against economic turbulence. In the fourth scene, we delved deeper into Bitcoin's store of value amid economic turbulence. We looked at how Bitcoin's decentralization and finite supply have allowed it to emerge as a potential hedge against inflation and traditional market instability. We explored cases where Bitcoin has shown resilience and even growth during times of economic uncertainty, sparking interest from investors and economists alike. As we wrap up, let's revisit the potential role of Bitcoin in the volatile world economy. As a store of value, Bitcoin offers an alternative to traditional financial systems. It's a fascinating prospect, and one that continues to stir debate and discussion. And so, we conclude our journey with a deeper understanding of Bitcoin's role as a store of value. As the world navigates economic uncertainties, Bitcoin continues to spark conversations, offering a fascinating alternative as a store of value.